So today our pre-Christmas masterclass, and we're going to cover a very interesting topic. It's IT industry. If you invest in the stock market, you probably know that it's quite tough right now to find something which is reasonably priced, because the market moved quite a lot up after Donald Trump election. But still, we try to find something nice and good for us to invest on. Okay. So before I continue, just curious, who works in IT right now? I'm not sure. Fraser, do you work in IT, or Dean? Or you don't have more digital marketing? Okay. Online marketing. Okay. Okay. Still, you understand what this kind of this industry, Fraser Insurance. Okay, perfect. All right. So in any way, so let's continue. Disclaimer. Important stuff. So understand, today we're going to talk about this company, but before, and about the strategies as well. But before you make your decision, you have to make your own decision. So you have to analyze, you have to do it yourself. Okay, don't rely on me. That's your money you invest, and it's going to be your profit and your losses. So that's why it's very, very important. Regardless if I analyze this company or not, you have to make your own mind. You have to analyze this company, and you have to do it. I'm going to show you how to analyze the companies in my best abilities, but when you invest in your own money, remember that before you do it, you have to look at your own circumstances. Okay, that's clear? Put yes if it is clear, and we'll go ahead. Okay, so what's the plan for today? So first of all, we're going to look at current market situation, because it's very important to know where we are right now as a market, and we'll look at the next month, what can we expect from that. Then we're going to look at pros and cons of investing in IT industry, and we analyze Infosys. And after that, we're going to look at different possible trading or investing strategies. And then if you have any questions, we're going to cover them as well. Now, questions, they could be asked regarding anything. It doesn't have to be Infosys. It could be any other company. Okay, so, and we can go or any other issue. So Dow Jones. Dow Jones represents 30 biggest companies by its capitalization. Okay, by their capitalization. So what we can see here now, that's the between April 2015 and the current time. So these two trends, you can see this trend which is going up, and that top line, resistance line, that's a long trend. So it's starting from 2009. So if you open the chart software on your computer, you will see that this trend is going already from 2008, 2009. Okay, so what could we see during last year? It was flat. I mean, it was parallel. So we can see that it was the maximum about 1800, and the lowest point was 1550. Okay, so, and until probably July, it was in that area, and then after July, it started moving up. So it's broke the resistance level, which was flat for the year, and start moving up. And this movement, that's after election. So when Donald Trump was announced as a president, this news was kind of quite good for the market. So market took it pretty well, and you can see how high it moved. So it's more than 10% the move since that moment. So everything which, I don't know your shares, but my shares are just jumped up, everything. And now I exited majority of my stocks. At the moment, I'm in cash in most of cases, about 90% probably, and waiting until it pulls back in order to enter new positions again. All right, so pay attention that the market is pretty high. Now, if it continues to rise, so probably we can expect that if we continue this resistance line, which is going from 2009, so we can expect maybe it will hit it there somewhere. So it would be a next resistance level, because at the moment it's really difficult to say where it's going to stop, because until now there wasn't ever that high ever. So at the moment this Dow Jones Industrial Average is on the highest point in its history. Okay, and that's why it's very difficult to assess where the resistance level is going to be. Okay, because it's broke through all the moving averages, and the only one is this resistance line, which lasts from 2009. Okay, and also we can see, if we look at the indicators, we can see that all of them in over bought situation. Yeah, and like usually when it's so high, we can expect some kind of pullback. Okay, so we can see it was high here, right? And then when it starts slowing down, it slowed down as well. Not that much, but still. Okay, so we can expect that the best time to buy, it's when the indicators like that. Okay, so we can see it low here, here, and here. In this case, that's what the best time to enter the position. At the moment, it's really, really high. So imagine if you buy something from Dow Jones, it can easily can go about 10% down. So be careful. Okay. Now, if we look at another index, S&P 500, so it's pretty similar situation. Was flat in 2015, and now it's moving up. So we can see first roll, second roll, and also it's approaching to the third roll. Okay, and then we can expect a resistance level, and then it can pull back. So also it can go back approximately 10%. So, and also indicators, we can see all of them, they kind of overcooked. So we can expect that like based on that, it can go down as well based on technical. Again, the best time for us to enter position when it is something like that. So when MACD is below 0 and start moving up, when we can see that RSI and stochastic, like stochastic below 20 and RSI below 30, and then turn around and crossing the line. So that would be the best time to enter. And the next index, it's Nasdaq. Very similar situation. One roll, second roll, and now we're at the top of the third roll. Again, same historical maximum. Okay, so it's never been on those levels. And also we see indicators they overcooked. So also we can expect that there would be pullback. And actually the pullback might happen tonight or today, because I think Fed, they report, they provide report today, and if they have a news about increase of the interest rate, so it might trigger the movement of the market down. Okay, that's actually one trigger. Another trigger, I believe, might be that a lot of traders during Christmas time, they take holidays. Okay, and because they work hard during all year, and what they do, they just go somewhere. And when they go somewhere out of the market, they usually close their position, so they don't keep position over such a long period of time open. And I talk about day traders, and of course it means that they have to close their positions before they leave. And if they leave in the end of this week, so probably that would be the last week of their trading time, and after that for 2 weeks they take holidays. So we can expect that the drop in price if there is a huge sell-off of those shares. And also it's important to know, because during Christmas time volatility would be quite low, so there wouldn't be too many participants in the market because of holiday season. Okay, so take it as a precaution, so that can trigger the pullback as well. Okay, if you look at the last year, that's what happened in December. We can see that in December it had moved down, then it moved up, and then it starts sliding down. And we can see that in January, whole January, it was going down, and it's actually moved nearly 20%, 19%. It's moved down, Nasdaq. Okay, so if it happens similar stuff this time, so it will give us great opportunity to enter positions. Fantastic opportunity. All right, so and I'm looking forward to something like that. Okay, hopefully I will have enough patience to wait until it falls to the bottom. because that's probably the toughest thing to do. Okay, so that's Compaq. And another one I wanted to show today, it's VIX. VIX is kind of index of fear, I'd say. And index of VIX usually it's moves different direction from the index. So we can see that if the indexes S&P 500, Dow Jones is high, VIX is low. When the VIX is high, the indexes is low. So and that's why a lot of people what they do, they look them in combination. So if they see that VIX is somewhere on those levels about 20, it's quite a big chance that the market is going to go up. So because when it happens, usually the market is already high or low in this case. When the VIX is high, the index is low. Okay, so pay attention to this as well, index. Now you understand why it is important to know, because if you enter in position, the best time to enter the position when the market is low and your share is low. Because quite often what happens that if your share is at support, already at support, your share, and you believe that, okay, great time to enter, but the market is so high and markets start moving down, it pushes the share price also down. And even your share was already at support, it still moves lower than that. Okay, and imagine that if your share is at resistance and the market is high and they both start moving up, so the share in this case will move down even more. So that's why it's really, really important to understand that the best time to buy your shares when the market is low and your shares is low, like based on technical analysis.